session is being recorded. Okay,
Is it too
perfect.
small? Or
I can see if you minimize the chat, then it gets bigger.
okay, I'm going full screen just in case. So, okay, welcome to Decrypting Crypto Taxes, Phoenix Crypto. Okay, so we have for today a small welcome to Phoenix Crypto, which I think we already had. Then we're going to talk about taxes in Latin America and America. I mean, the whole America. And then we're going to wrap up, and maybe if you have questions or you want to say something, we're going to have small time for that. Okay. So okay, so it's a bit hard, like to generalize like what's going on in the whole Latin American continent about taxes, because every country is quite different. Even there is one in Central America, Salvador, where Bitcoin is a legal currency. So what I wanted to do here is just point out a few things, or maybe the direction in which the governments or where the crypto regulation is going, instead of going just in a specific like country by country. We're going to take four examples for countries all in South America: Chile, Colombia, Peru, and Argentina. And we're going to see how the thing is going. Okay, so basically, the direction this is going is like cryptocurrencies are being seen as an asset, um, more specific as an intangible asset. In some countries, a digital. Um, we're going to talk in a second about what it means to be intangible and tangible. But yeah, so for the governments and the cryptocurrencies, something that's going into your equity. So basically, your equity is what you have. It's like what you earn minus what you owe. So that means that depending on how much equity you have to start paying taxes every year. Um, it's also here interesting that in Peru it's being called a movable asset, um, which is more treated like an inventory or something which is going to be sold. I mean, even a house can be. I mean, how you can't move a house, but you can say house is a movable asset. If, for example, you're like a real estate in the real estate business and you're about to sell those houses, so you can treat this asset as a movable asset. Okay, so it's also here interesting that in Chile and in Colombia we have already some concepts from SEC or like financial entities about these topics. But in Peru, for example, there is no official statements about this. And in Argentina, they're actually using their income tax law, but there is not any definition for this topic yet. So as it said, I wanted to take a quick look at what's an intangible asset. So basically, tangible it means that it can be touched. But so here, for example, in traditional finance, tangible asset can be land, vehicles, equipment, inventory. But also curious that within the tangible assets, there bonds and stocks and cash are there. So here, the governments are saying, okay, cryptocurrencies are intangible assets, and they are not in the same category as land, vehicles, and stocks and bonds. So they will be more in the category in this category. Like uh, these are the actually intangible list for the traditional finance. Will be like goodwill, brand equity, research and development. So I was a bit surprised to see that the governments are defining cryptocurrencies this way. And it's quite a bit confusing too. I had to like look this up a few times to see I was not wrong. Okay, so here are a few examples of what could be subject to taxes. So for example, if you dispose cryptocurrency for money in local currencies, do I need to pay taxes? And the answer in most of the cases is going to be yes. Of course, this yes is a yes if or yes when. Um, Of course, if you make a profit, you pay taxes to the government. Um, it's quite interesting that here in Peru they say no. Unless it's a business transaction, you don't have to pay taxes. But also in the concept that are in the regulations, they will be saying it's understood that you have to pay taxes if you're an individual, if you're trading with frequency, but there is no like specific definition. Where are you frequently trading cryptocurrencies? Is it like one time a day, one a month, a year? So it's quite ambiguous, this definition. Wait, give me a second. I wanted to check something. Um, yeah. So, for example, if you pay with good with cryptocurrencies, this here is going to be considered a swap for these governments, except for Peru. Also, if you buy crypto with another crypto, and what about if you receive cryptocurrencies, crypto coins from like mining? So it's not clear yet in Chile, but in the rest of the countries, they say yes, because the crypto that is received is in exchange for a service or a commission, according to the government. So yeah. Um, okay. Here's a bit interesting that buy with cash and hold them. Um, if you donate the crypto, I mean, it's not really clear if you have to pay taxes with that. It depends on the ONG and all the kind of stuff. But here, Colombia is the only country where if you buy crypto and hold them, you are going to have to pay taxes because according to the Colombian tax law, it's an asset, and you have to report to the government all the assets you have. And at the end of the year, if your are worth more than, I think it's 40,000 in equity, you have to start paying taxes. Also, if you gain more than $10,000 a year, I mean, from your work, you also have to pay taxes. And I think this limit is quite common among American countries, Latin American countries. Okay, here. So, for example, if I transfer crypto from one wallet to another, I don't have to pay taxes. And you say, okay, of course, you don't have to pay taxes because it's your money going from one place to another. But in the traditional finance world, it's not like that. For example, in Colombia, if you transfer money, fiat money from one bank account to another bank account from yours, you have to pay taxes, which is ridiculous because it's still your bank accounts. Also, there is this debate: how is the government going to know you're transferring from one wallet to another? Because basically, it's an address, so it's quite ambiguous. Also, this definition. Okay, and then also, okay, if you transfer crypto into an exchange to a wallet, you don't have to pay taxes. But also, what happens if I transfer crypto from an exchange to an exchange which is not registered in this country? For example, if I buy my crypto in Coinbase, is it going to be different if I buy from Kraken or from I don't know, an exchange located in Europe or in Asia? So it's not quite defined. Some governments, really advise for you to declare your assets. So say, okay, even if you don't have to pay taxes, you have to tell to the government, okay, I have this Bitcoin, I have this Ethereum, I bought that at this price, and blah blah blah. Some people agree to that, and some people say it's ridiculous. Okay, but about what about presents? Okay, we'll wait and talk about charity. But okay, if you give away cryptocurrencies, you don't have to pay taxes. And if you receive as a present cryptocurrencies, in general, you don't have to pay taxes, except again for Colombia. For the government, it's like treated like as occasional income. So it's like something that you earn just at this time. So basically, they want money from it. It's like winning the lottery. So yeah, they it's like the same concept. They take taxes from it. So yeah, shame. Okay, so here it's a small. I hope it's not too small. Here's a small summary of like how it's considered like when you have to pay taxes. So basically, we will say in Chile, If you sell your crypto and you obtain a higher value, you have to pay taxes. In Colombia, is when an asset is disposed, and that means when it's sold, meaning when you're no longer the owner of the cryptocurrencies, but selling, trading, or making any contract or business, transferring the ownership. As I say, here in Peru, it's quite ambiguous when they say, okay, if you buy and sell with high frequency, you have to pay taxes, but no one is saying what's high frequency. But in general, they treat also if it's not a business activity, you don't have to pay anything. If it's a business activity, then you have to pay. And in Argentina, you have to pay when you sell and make a profit. Okay, so lastly, I want to say, okay, some info to take into account. So like every year after like the end of the financial year, you have to make like, present your taxes. So you're going to do the same with crypto. So you have to calculate if you made a profit or you lost money, and so you have to check each transaction and say, okay, I bought it at this date at this price, and then what's going on. You have to also apply a method to calculate that. So basically, I'm not gonna go into that, but we have FIFO, which is first in, first out, LIFO, which is last in, first out, and weighted average cost. And I guess there are more methods to calculate that. Um, you have to also check if you are exempt from paying tax. As I said, like for example, some countries you only start paying taxes when your equity, when your assets are over a certain amount, like let's say $40,000, something like that. Okay, and also please consult a professional CPO. What I'm saying is just some small guidelines, and this change all the time. So you have to really make sure you know what you're doing. Also, there are not guidelines when in the hard fork cases. So if you receive crypto as a hard fork, what happens? Some people are saying, as I said before, like if you receive unexpected money, it's going to be considered an occasional earning. So they're going to tax you according to that laws. And also, yeah, inform yourself. You live abroad. So let's say you are from Chile and you live in United States, which tax criteria will apply? Do you have to pay taxes in America? Do you have to pay taxes in Chile? And what happens if you're using an exchange from another country? Okay, you're using an exchange from Japan, so it can get crazy. So you gotta check also that. And just lastly, these are just the forms used in every country to present taxes. But yeah, just a small info on that. And I'm done.
What's an ONG?
Oh my god. Uh, I didn't translate it. I thought I was the same English. It's this charity, it's this non-profit organization, something like that.
Oh, is it like we have NGOs,
Yeah, it's
non-governmental, or
that. Yeah,
is that it?
NGOs.
Okay. Okay, I
Oh my
wasn't sure if
god.
that was something else and I was missing it,
I
but
thought I was
okay.
English. Oh my god.
No, it's okay, it's okay. I just wasn't sure if it was something else that I wasn't aware of, but okay, that helps. And then I can't believe that you get taxed when you transfer money between bank accounts, like fiat.
It's
That's like
crazy.
that makes
They
no
s-
sense.
they said it was a temporary tax. I mean, it's like 4/1,000, but it was not temporary. It has been 20 years with that.
Oh my gosh.
And they also have more taxes, and it's just ridiculous. I mean, it's my money, it's my bank account. Why do I have to pay? I already have to pay the
Mhm.
transfer, which I also think is really bad, to pay like $2 every time I want to transfer from one bank account to another, which are not from the same bank. I mean, it's much cheaper to transfer, for example, Bitcoin Cash. I mean,
Oh,
this is so
100%.
like archaic.
Yeah.
And then I have to start paying, and then the banks takes another commission, um, because they say so, and then the government takes another commission, and it's like this is crazy. This is
I would never transfer money. I would just keep it all in one bank account
yeah.
and just not put it anywhere. That's
It's also like
ridiculous.
in these countries, people use a lot of cash. So like it's like the same in Salvador, like only just a small percentage of the population really have a bank account and are into
Mm.
the financial systems. So that was also a big motivation, for example, for El Salvador to adopt Bitcoin, because not only they, I mean, you need, I mean, if you transfer like remittances, I think is the word, you can use
Yeah.
Western Union, something like that, but it's much better if you don't have to pay that commission, stuff like that. So I think that will be a strong point for Latin America to adopt crypto in the long term.
Yeah, I would definitely agree with that. Just the costs are like is much faster, and in most cases, except for Ethereum or something, the costs are much lower as well. So it's like, why wouldn't you do that?
Mhm.
All right, so on to crypto taxes in the US. So what you were saying, a lot of it is pretty much what the US is doing as well, with a few key differences. If you want to hop on over to the next slide.
Um, Wait, do you want me to keep using my screen or?
Sure. Yeah. So I guess about crypto taxes in the US is that crypto is actually taxed as property. So you were mentioning that in Latin America, it's taxed as an intangible asset. And I think it's one key difference because we have all these property rules and how to tax different forms of property. And crypto is actually treated as property, not as an intangible asset under the tax rules. Now that's confusing because if let's say you're trying to do financial statements and you work for a public company, that any crypto that you hold is going to be treated as an intangible asset on your financial statements. But when you're trying to do your taxes, that's treated as property. So there's sort of two different treatments going on depending on if you're just doing like financial statements versus doing your taxes. So treating crypto as property brings up a lot of unique characteristics, I should say. So I have up a list here of just what's considered taxable versus not taxable for crypto specifically. So I'll start with the taxable part, and a lot of it again is very reminiscent of what Enrique was just saying. So there's two different types of income you could say that are taxed. So income's either taxed as capital gains or it's taxed as ordinary income. So when I say capital gains, that can apply to, let's say, selling crypto. So if you have some crypto and you want to cash out, then almost like an exchange, and so that's going to be taxed. Trading, so if you or swapping, so if you swap one crypto for another crypto, that's considered taxable. And then spending, so if you spend or if you give someone tokens and they did work for you, that would also be considered taxable. So basically, if you do anything with your crypto, any sort of movements between different wallets or different platforms, that's going to be considered taxable. One thing is that if you're doing an internal transfer, so if you're transferring from one wallet to another one, similar to Latin America, that's not taxed, which is great. But in the US, I don't think we have a tax on transferring fiat between banks. At least it's like not that much.
Mhm.
I think it's more of like a bank fee versus a tax the government's imposing. So yeah, those are the main ways you can be taxed under capital gains, and we're going to get into that a little bit more. And there's different rates or different brackets you can fall under. So depending on how much income you've earned throughout the year, your capital gains tax is either going to be 0%, 15%, or 20%. And also depends if the character of your gain was short term or long term. So let's say I held some Bitcoin for 6 months and then I sold it. That's going to be treated as a short term gain or loss, depending on which way the pricing goes. But let's say it's a short term gain, that's actually going to be taxed at ordinary rates. But if I had the Bitcoin and then I sold it a year and a day later, then that's actually going to be taxed at long term rates. And the long term rates are the 0, 15, and 20%. So we call those capital gains rates like preferential rates because they tend to be lower than the ordinary income rates. So it's just kind of like a good strategy if you have crypto, to hodl it, I guess, and hold it longer than a year because your tax liability is gonna be lower when you eventually dispose of it. So the other character of income is what's called ordinary income. And so think of that as, when you get a W-2 from your employer, those wages are going to be taxed as ordinary income. And so when you think of that, just think of tax brackets. So, the government or the IRS puts out tax brackets every year and it's what's called, what is it, like a graduated? No, regressive. I forget what it's called, but basically, depending on how much income you earn throughout the year, is taxed according to different brackets. So, if you're a miner and you mine Bitcoin, you receive it that way, or if you're a validator and you earn staking rewards, or if you get crypto from airdrops, hard forks, whatever it might be, that's all considered income to you, and that's taxed at ordinary tax rates. So again, the tax that you're going to pay on this really depends on how much income you earned overall. So that's what's taxable. That's the bad news. But there are some cool non-taxable events as well. So like if I buy a crypto off Coinbase and so I connect my bank account and I get some ETH, that's not going to be taxable. If I transfer it between two wallets that I own, not taxable. If I loan it to Enrique or to my mom or whoever, not taxable. And then obviously, if you donate it to a charity, it has to be a 501c3 charity, which just means like registered or recognized as a nonprofit by the IRS. Then that's also going to be tax free, which is awesome. Next slide.
So if you loan it in, for example, Aave, you are not paying any tax on that gains?
I I don't know if they're talking about liquidity providing. I think it's like if I give you a loan because you need crypto to do something. Like if you are liquidity providing, that actually is considered taxable. And honestly, okay, I'll just get into DeFi taxes real quick. So basically,
Okay.
if you're an LP for a pool, you're trading in a pair of assets, let's say Atom and Osmo. You put that into a pool, so you're lending it to the pool, and then in return, you're getting a liquidity, an LP token back, which represents your ownership share of the pool. And so it's actually considered taxable because it's like an exchange. You're essentially trading the pair of tokens that you're lending to the pool for another token, an LP token, and so that's considered taxable. And the same thing when you exit the pool, when you give in your LP token and you swap it out for the pair, that's also considered taxable. That's more under on the like capital gains tax is triggered, and then any LP rewards that you're earning throughout the life of the pool, those are considered just ordinary income, and those get taxed. So again, I will say like none of this is really set in stone. We're still waiting for better guidance, but that's what I've seen other people do and that's what I've heard talked about. So that's just a detour into DeFi taxes, but let's get into cost basis 101 because cost basis is like one of the most important concepts when it comes to crypto taxes. Cost basis is just a fancy word that means when I got some crypto, how much did I pay for it? So if I bought some ETH today at noon, whatever the spot price was at the time that I purchased it, that becomes the cost basis for the crypto that I purchased. So that's important, especially when it comes to calculating your capital gains or your capital or your loss. So if I buy ETH for $100 and then I sell it, let's say next week, and ETH has appreciated $200. I'm going to take the income that I got, so that 200, and then I subtract my cost basis of 100, and then you get a capital gain of $100. Well, it'd be short term because I sold it within a week, but you get the idea. It's pretty much what did you buy the crypto for, and then that cost basis is attached to that piece of crypto essentially. So Enrique touched on the different cost basis methods. So there's FIFO, LIFO, weighted average, specific ID. And essentially, it's just a method for determining what cost basis you should use when you're calculating a gain or loss. So in that same example, let's say I bought $100 of ETH today, I bought $100 or 150 of ETH tomorrow, and then I sold it later. If it's first in, first out method, then you're going to take the cost basis for the first, let's say, lot of ETH that you purchased. If it's LIFO, you take the most recent one. So cost basis method, just a fancy word for just what cost basis should I use when I'm trying to calculate a gain or loss. So that's cost basis.
Can it get crazy? For example, if I say, okay, I bought a Bitcoin at 2011 Silk Road anyway, something like that, at
Mhm.
$1, and now it's $60,000. So my cost base is gonna be crazy or
Oh, it's gonna be
something.
huge. Yeah, it depends. Like if you hold it, nothing's gonna happen. There has to be some sort of event, some kind of event that triggers the tax. So if you bought it when it was a dollar and now I think it's at like 29K, which is really sad. But let's say you sold it when it's 30K, then your cost basis is still that dollar, and so you're gonna have a capital gain of 30K, and then that's gonna be taxed at the long term rates of either 0, 15, or 20, depending on your other income.
Okay, so if I exceed some value, it's not going to have different tax rates. For example, I don't know if your capital gains are over, I don't know, $1 million or something like that, like tax the millionaire, it's a harder tax. So it's just the same brackets for, I mean, it doesn't get crazy, right? It's like they say, okay,
No, I mean, there's other things like AMT, alternative minimum tax, which is like a tax on top of your normal tax. But I don't know. I don't know enough to answer that question. I don't know if that would trigger AMT. Your cap gains, the cap gain rate would be 20%. But I don't know if there could be AMT on top of that. I don't really, I'm not a tax accountant, so I'm not really quite sure.
okay.
But onto some fun stuff. So Sorry, I was in a Pusheen mood when I made these slides. But crypto tax controversies, and there's two of them here that I put up that I think are interesting to talk about. So the first one is, are staking rewards taxable? And you might have seen this in the news because a lot of people were talking about it. There was a case where a taxpayer, they filed or they sued to get a refund of the tax they paid on their Tezos staking rewards, and the judge gave it to them. Didn't really tell them why. The judge gave them the refund on the tax that they paid, and so that triggered a lot of conversation on, well, are staking rewards taxable? Are they not taxable? Because a lot of people, or there are some opinions that they shouldn't be taxable because it's almost like a stock split. And so with the stock split, even though you might have like gotten some more stock, the overall cost basis didn't really change for those, so you're not really gaining anything by that. There's also the other argument that I think people are likening it to almost like a farm, where it's like if you have, let's say, a cow and the cow produces milk, the milk from that cow isn't going to be taxed until you sell it. And so that's why people are saying staking rewards are kind of like the same thing. Like if you earn staking rewards until you dispose them or trigger some other taxable event, essentially. So there's not much clarification with this. A lot of people saw this case and were like, "Oh my gosh, this means that I don't have to pay tax on my staking rewards." But that isn't really the way you should read it, because first of all, this case was very localized. It was like a local judge that made this ruling, and so that only applies to the specific jurisdiction that this taxpayer was in. It's not a federal thing. So yes, you should still probably pay taxes on your staking rewards. Again, that's treated as ordinary income. Although you can argue your position, like if you get a tax firm or like a tax attorney to write you a position and you defend that in front of the IRS, then who knows, maybe you'll get a refund too. So it really just depends because there's no further clarification or guidance on this. The next one is, are swaps taxable? And this is because I was chatting with one of my coworkers and he wasn't sure if swaps were taxable because he brought up there's this concept in property tax called like kind exchanges, or the code or the section of the IRS code or the section of the IRC is called 1031. So they're called 1031 exchanges. But basically it means like if I have a house and I sell it, but then I buy another house right away, then I don't have to pay tax on that disposition because I'm getting a like kind asset in exchange. And so he was saying, well, if I'm swapping ETH for Bitcoin, that should also qualify as, I shouldn't have to pay the tax on any cap gain or loss there. But the IRS has taken a pretty hard stance on this and said, yes, swaps are still taxable. And you have to think about it in terms of cost basis, right? So like in that example, let's say there's some cost basis that's attached to that ETH. And so when I'm swapping it for the Bitcoin, there's going to be another spot price for the ETH at that point. And if it's higher than the cost basis, it's going to trigger a gain. If it's lower, it's going to trigger a loss. And then whatever I sell that ETH for, whatever that price is, that's going to become the new cost basis of the asset I'm acquiring. So just to give you some numbers, I buy some ETH at $100 and then I go to swap it for Bitcoin a few weeks later, and now ETH is at $200. I'm going to have a capital gain of $100 and the cost basis of the Bitcoin is now going to be $200. So I wouldn't think of it in terms of like giving up one crypto for another. You're really disposing of one asset and acquiring another one. So I'm sure there's probably more crypto tax controversies, but I think these are the two most interesting. Next slide. And so the question becomes like, how do I, especially as a consumer or like a retail user of crypto, how do I keep track of all this stuff? Because the IRS really wants you to report your crypto on the front page of the 1040. It says, at any point during the year, did you acquire or use crypto? And it's like this huge checkbox on the front page. And if you check yes, then I'm not saying that you will get audited, but your chances of getting audited might be a little bit higher. And so even though the IRS hasn't issued any guidance, they still want, obviously they still want to tax their money, So the question becomes, how do I track all of my activity if I am on multiple chains, if I'm using multiple exchanges, if I have activity everywhere? I guess it'd be kind of difficult. And so, especially because there's not that many crypto accountants out there, you might have to do this by yourself. So I put up a few crypto tax software providers that I would recommend. Some of them are more enterprise focused, like a Bitwave or a TaxFit, but then some are really good for retail users. So I'd recommend CoinTracker, Coinly, or Cryptio. They're all pretty good. Essentially, you just plug in your address or your address is, and then they can automatically calculate your gain or loss across all of your activity. The thing is, like, there's a lot of providers out there, but there's still a lot of manual intervention that you'd have to do. So I really would recommend looking at each one of your transactions, making sure they're pulling in properly, that they're tagged appropriately, because it could really change your tax liability if these softwares are off. And so a good example that I always like to say is I was doing some taxes for some people that were on Juno. So they were within like the Cosmos ecosystem. And there's this thing in Cosmos called IBC transfers. I mean, it stands for inter-blockchain communication, and I love that term. But essentially, it just means transferring different assets that are all hooked up to IBC. So if I want to transfer Juno to Osmosis to then swap Juno for any other token that Osmosis supports, like I can send it through IBC channels and it just kind of goes to the blockchain that I want it to. So Coinly was treating all those as taxable because they were saying spending it somewhere, so it's a disposition, or I'm spending it, so it's taxable. But really, it was just like an IBC transfer to another wallet. But these softwares aren't smart enough to pick that up yet. So then I had to go in and manually tag everything as a transfer, and that reduced the liability a lot because it minimized like a lot of the cap gains that were going on. So you really have to pay attention. If you're unsure, I recommend getting a CPA that understands crypto and that can do this stuff for you, because it can really make a difference in what you pay to the government at the end of the year. So that's my spiel on crypto tax softwares.
Next slide.
And then I just threw up some forms here. Enrique had some forms. So I was like, I got to get some forms up too. But there's two main crypto tax forms. So the first one's from Form 8949 on the right side. And so this is basically just like a schedule where you write out all your sales and other dispositions of your capital assets. So crypto that you sell needs to go on this schedule. And I don't know if you have to put everything. I think I also do accounting for a DAO, and I think our tax preparer just did it by asset, so listed out like the sale and other dispositions by the type of asset we had versus putting every single transaction we've ever done, because it was quite a few. So again, I would just ask whoever's doing your taxes what they want to see, but that's where you calculate your gain or losses, and then you carry it over to Schedule D, and that's sort of where you aggregate all your gain and losses across all of your assets.
Wow.
That's what our forms look like.
I love them. Gosh.
And then that was all. Was that all I had? Sorry, let me check real quick. Yeah, that was all I had. The tax deadline, it's passed already, unfortunately. It was April 18th. So hopefully you filed an extension, because then you have until October 15th to file your taxes. But if not, you can always file an amendment. So yeah, any questions on anything Enrique or myself went over? I guess Stego, that question's to you.
Let's check if he has some questions.
I do have a question for you, Enrique. What's a CPO? Because I'm a CPA, so I'm not sure if that's like, what does that translate into?
Oh my god, I think it's the same mistake I did. It's a typo. I wanted to say a CPA.
Sorry, I just wanted to make sure, because I was like, oh wait, is this like, I just want to learn about what other people in different countries are called, which is cool. So any asset swap like on Uni will trigger. Yeah, so unfortunately, if you're like swapping, I don't know, like USDT to DAI or something on Uniswap, that will trigger a taxable event. Because even though there's stable coins, like the IRS doesn't treat stable coins as cash or cash equivalents. They're treated as property. So they're like any other crypto. And I guess another good point on that, NFTs aren't treated differently. NFTs are crypto, and so they're subject to the same rules as the rest of crypto. It's interesting though, because there's in the IRC code, or in the IRC, there's something called a collectible. And so it's like a capital gain on like a piece of art or some other kind of collectible, and that's actually higher. That's at 28%. So that even though NFTs are like the collectibles of crypto, they're not subject to that 28% yet. It's still only 0, 15, or 20%. So just want to call that out. What if done in a ledger or a MetaMask wallet? How would they trace back to me for reporting? If you're doing it on Uniswap, you can just like put because that's still attached to a wallet address, right? Even if you're doing it on Ledger or MetaMask, like, not saying the IRS like knows how to use Etherscan or something, but you could theoretically trace it back if they popped in your address on Etherscan, because then everything would show up. So of course they would have to know your address. They don't ask for that yet on the 1040, but if you get audited, like they probably would ask for that.
Is it like for Bitcoin that every time you're gonna do a transfer in Bitcoin, you generate a new address, so it's gonna be harder for the
Oh
bank to
my
know?
god. Yeah, Avalanche is the same way. I just ran into this issue because especially like if you're not the one who holds the keys to those wallets, trying to track those transactions is almost impossible. So if
Mhm.
you have Bitcoin or Avalanche, the IRS is gonna have a really hard time tracking your activity because the UTXO models are just like they're such a pain to account for. Not saying you should like do tax fraud with Bitcoin and Avalanche, you totally shouldn't. But it's like way harder to track those transactions.
Yeah, I wanted to do another question. I mean, here, I mean, one of the, I mean, it's not a downside, but one of the people are saying that it's wrong about crypto is that it's used only for like only no, but they say like mostly by criminals or people who want to evade the law, even or maybe don't pay
Mm,
any taxes. Or now with
mhm.
these Russian things, yeah, it's a way to avoid sanctions, whatever. So, for example, here, and I mean here, I mean in Colombia, um, they have like anti money laundering laws, and
Yeah,
and even if you
KYC
do
and
with
all.
fiat and
Mhm.
cash, they say if you do over maybe $300, a transaction over $300 in cash, you have to report this, so crazy stuff like that.
It's
So
300.
now,
Ours is 10,000. I'm pretty sure that you
I
had
think
to
that's if
report
you want
KYC
to
for.
get money out of the
Yeah.
country. But for example, if you go to a bank with more than $300, they're going to start asking about the origin of the money. But yeah, 10,000 if you want to go outside of the country. And oh no, so now they're saying, okay, for crypto transaction, that if they're over, I don't remember the exact amount, but let's say $200, you have to report that to a anti-money laundering government organization.
Mhm.
And people are saying that's ridiculous just to report. I mean the boundary is too low to start reporting every time you do a transaction, to say, hey, I'm not, this is a legal transaction. Do you have something like that in US?
We do. I think it's not as low. I think it's 10. I was just reading about this. I think it was 10,000 where you're required. Oh, what is it? You're like required to schedule or you're required to file another form if you like send money over 10,000. Is it
Mhm.
10,000? I might have to get back to you on that. But that's kind of contrary because like we have you mentioned gifts, like if you gift someone in crypto. So we have the same thing, like, you can gift crypto to someone, if it's less than $15,000, there's no tax on it for the person giving it and the person receiving it, but then if it's over, you have to file, like a gift tax, like a gift form or something like that. So, maybe I that's gonna bug me now. I just read something about that, like, very recently, and I don't remember, but oh, maybe it was something about the infrastructure bill and, like, brokers and 1099s and something like that. Maybe I was thinking about that.
Mhm.
But no, 1099s, you have to earn more than like 600. Anyway, yes, we do have something like that, but it's not coming to me at the moment. Stego had another question. Like they trace it back from my MetaMask to my Coinbase account. So again, like they would have to, I mean, they might have more sophisticated technology now, but like they would have to like have your addresses in order to trace that. And yeah, I agree with you. Like centralized exchanges do have your information, and if it's like a Coinbase, then they probably like would give up your information. Um, but you should still also report taxable transactions that aren't on a centralized exchange, because technically you do owe tax on those. I mean, how they're going to find that out? You'd have to either give them your address or I don't know. They have some sophisticated forensic crypto tax software platform. I don't know, but yeah, it's a really good question though, and it's an open one. All right, anything else? Thanks, Diego. I think you've got a great handle. I love it. You should join our Phoenix crypto Discord.
Oh, he is there. He joined like today or something like
Oh,
that.
yeah? What? Oh, that's awesome. Thanks, Diego. That's awesome. Again, not as active on it as I'd like to be, but it's like pretty good. And Enrique's doing a lot of great stuff to revive the community, which is great.
Yeah, I think we're moving slowly, but I think we have a big chance of survive. Like maybe like Tesla with Elon Musk, something like that.
Yeah, I like those odds. I'm gonna stop recording now unless anyone has anything else.
No, I just forgot to mention that